Ricken Financial presents Kickin' with the Rickens, Redefining Retirement. Gerry Ricken and Heidi Ricken Provost want to help you reach the retirement you deserve. Let's build a strategy that gives you the confidence while meeting your financial wants and needs. Meet the team at rickenfinancial.com. Now, Kickin' with the Rickens.
Yes, we are back. Gerry Ricken, who is one half of that wonderful twosome there, Kicking with the Rickens. I'm your co-host, Doug Turnbull, and we are ready to jump right into this thing here. All three of us, Gerry, have been under the weather in some way, shape, or form in this past week. You and Heidi have a way better excuse to have caught something seasonal than I have. So how have you been celebrating there, big Missourians?
Well, Doug, we had the opportunity to go to the AFC Championship game last Sunday, and I know that this will air before the Super Bowl, so hopefully we'll have the same kind of success in the Super Bowl that we did last Sunday. But we had the opportunity to do that and celebrate our daughter Barbie's birthday because her birthday was on Monday. And she's been a Chief fan her entire life, and she said, "Hey, I just found some tickets," so we jumped on it and we went across the state, celebrated. And Heidi and I lost our voices. So it took us a little while this week to be able to record because we were out in the elements, doing the tomahawk chop and being in Arrowhead, the loudest outdoor stadium in the world. And had a wonderful time seeing our Chiefs beat the Buffalo Bills.
Yet again, right? What an epic game that was. The stats of both sides were almost equal. It was uncanny. And in the end, it was Patrick Mahomes and Andy Reid taking down Josh Allen and Sean McDermott over there. So I know you're excited about the Super Bowl, Gerry. And hey, we're excited for you. I mean, I know there's a lot of the Chiefs hate out there, but I like seeing this dynasty build and like seeing us go really. There was very little of it. I mean, basically go right from a Patriots dynasty to a Chiefs dynasty. So that's pretty incredible to see so much history at once.
I know, and we have a lot of family members who are Patriots fans, including my son-in-law, who's from the Boston area. So I can now empathize with how they felt because everybody hates a winner, and because they aren't winning.
Let's talk about winning in finances. Hey, yo, let's do the change-up.
Oh, I love that.
Come on, let's get right into it because you are bringing something to my attention and to everyone's attention today that I don't think it's discussed enough, the idea of, quote, becoming your own bank. So how does that work, Gerry?
Well, Doug, what we try to do is bring a lot of creative ideas to our client base. And in doing so, we evaluate all kinds of things out there. We're always analyzing things from a tax perspective. And this is one of those programs that allows us to save taxes in the future. So what we do, when you look at a bank, this is all about paying down debt. That's what today's episode is about, is if anyone has debt out there, you should probably talk to us about this program. And you can call us at 314-442-6476 or hit us up at rickenfinancial.com. That's RICKEN financial.com. We'd love to share some things about this particular program because when you think about a bank, what a bank does, the way a bank makes money is they take our cash as deposits. They receive deposits. They pay us a little bit on our deposits. Then they take that money and they lend it out to other people at a much higher interest rate. So they make the spread between what they're paying us and what they're receiving from others, or what they're receiving from us and paying others. Either way, it's deposits versus loans. So they make that spread and they make a lot of money, and they should. That's what they're in business for. So what we're trying to do is give you the opportunity to become your own bank and at the same time pay down debt. So the way this process works, Doug, is it's a creative way of using life insurance to become your own bank and to replace your bank. We use a whole life policy and we blend in some term to lower the cost of the policy, but the IRS has guidelines out there. You can only put so much money into a policy without the death benefit going higher. So what we do is we use those IRS guidelines and lower the death benefit as much as we possibly can. Because when you think about life insurance, you typically think about paying the least amount of premium for the highest amount of death benefit, because that's what you're using it for. You're using it for after you're gone. We want you to use this life insurance policy while you're here for living benefits. So what we do is we reverse engineer that policy. We cram as much cash into it as quickly as we can, lower the death benefit, which lowers the expense in the policy, and we use it as a cash cow, if you will, inside the policy. Cash value builds up inside the policy. As cash value builds up inside the policy, you borrow against that cash value. You take the money out and you pay off debts.
Gotcha. When you say borrow against it, how, do you have to then pay the policy back? What exactly does that mean, I guess?
Here's the way it works. Here's the best way that it works. You create a loan inside the policy. It pays off a debt. You were paying a minimum on that debt, a minimum payment, let's say $100 on that debt. Okay, you paid off a $1,000 debt or $1,500 debt with this loan. Now you have a loan out there inside your policy. The $100 of a minimum that you were paying, you now pay inside. You continue paying that minimum. Mm-hmm. Okay, even though the debt's paid off, now you're paying it back to yourself. You're paying your loan off.
I see.
Inside the policy.
I see. Got it.
So, but at the same time, you're earning income on your cash value inside the policy, and you're paying your debt off inside the policy. And there's an interest rate spread in there, but it's not very much compared to what you're paying on the outside world.
Sure.
So you continue doing that. And this only works if you have the ability to pay in excess of your minimums on your debts.
Yes.
Okay. But you continue paying your premium payments in. It builds up cash value. Obviously, there are expenses. You know, it's not a dollar for dollar cash value versus premium because there are expenses in this thing because it's a life insurance policy. But you're growing it tax-free inside the policy. When you're borrowing out, that's not a taxable event. So you're using tax-free growth to pay off debt. Then you're paying your debt off inside the policy. Then you continue paying your premium payments. Cash value continues to grow. All of a sudden, it grows to the point where you can pay off this debt. You pull the money out by loaning it to yourself. You pay off your debt. You take the minimum on that debt payment, okay, that you're paying, and you accumulate that and you pay it back into the policy.
I see. Okay. So
you're growing an asset. You're borrowing against that asset to pay off debt. Then you're repaying yourself that loan with the minimums on the debt you've repaid.
And then in doing so, there's a way to save taxes as well.
Yes, because a life insurance policy, once you put the money in, you use after-tax money to fund it, obviously. But the money goes in, it grows tax-free inside the policy. You borrow it out. A loan is not a taxable event. Mm-hmm. And then there's a death benefit in this. So at the end of your life, the death benefit goes to your beneficiaries tax-free. So it's a complete tax-free plan after you put the money in.
Now, you've dealt with life insurance for decades and dealing with this. I mean, this is such an interesting strategy to me and one that I'm not familiar with. I'm so glad I listened to Kicking with the Rickens, Redefining Retirement. I'm learning a lot right here.
You are a smart man, Doug.
But that means you've seen a lot. Yeah, I'm surrounded by smart people. That's what I am. So what are some ways you've seen this work? Because you have some hard numbers and good realities here.
Well, we do. We work with a lot. You know, we like to share this with the younger generation especially because, you know, when we think about debt, the first thing that comes to mind with the younger generation is student loan debt.
Sure.
So, you know, let's say we have a 23-year-old, just graduated from college, got their first job, 23-year-old male, has $58,000 worth of student loan debt, which is not unreasonable, okay? So, but when you look at their real debt, and that's going to be paid off in the next 10 years, okay, by using the schedule that the student loan company, the credit company that lent the student loan to you, that's what they say. They have a 10-year amortization period. You're going to pay it off over the next 10 years. Well, the total you're going to pay is a lot more than that $58,000 you borrowed. It's going to be about $72,500, okay? So by using this program, if this person had an extra $700 a month to put into this program, okay, you pay the minimums on your student loans. You put $700 into your own bank, if you will, quote unquote, in this life insurance policy. Then instead of a 10-year payoff, you'll be able to pay this off in about 4.8 years. Wow. So less than half of the time. At the same time you're doing that, you're saving about $4,800 in interest. And even better than that, you're building an asset which will be tax-free to you. And at the point in time you pay it off, you'll have $44,000 worth of cash value inside your policy working for you. So it's a completely different kind of strategy than the talking heads say when they talk about debt extinguishment. They always say pay off your largest percentage of debt first, and they say pay that off, pay that off, pay that off. But you're not building anything when you're paying that off.
Yeah, I see what you're saying.
This gives the opportunity to have two jobs for $1. Okay?
That's good.
You're building an asset at the same time you're paying your debt off.
Yeah, that's something that I've not heard described that way before, too.
Yeah.
So there's somebody with college debts, but then I know later in life there's people that have just tremendous debts and are probably terrified of retirement because they know their income is going to be shrunk.
Well, we have a couple in their early 40s, and we analyzed this for them. And they have two small children, and they've got a lot of debt because they had a lot of student loan debt. They've got a home equity line of credit. They got a large mortgage. Their debt's $775,000. Okay? They're in their early 40s. But their real debt, if you look at accrued interest, and by the way, that debt is going to be paid off over 26.3 years because that's when their final mortgage payment. Yeah. Their final mortgage is going to be paid. So their amortization schedule says we're going to pay this all off in 26.3 years. Their real debt's $1.1 million. Little over $1,130,000, okay? So that's because that's all that accrued interest you're going to be paying for your lifetime. We're going to be able to save them about $129,000 worth of interest during the period in which they're paying this off by using this program and replacing the bank with themselves. And instead of 26.3 years, we'll get that down to 12.3 years.
Wow.
Their mortgage, their home equity line, their car loan, their student loans, everything will be paid off in 12.3 years. At the same time, they'll have $154,000 worth of cash value in the end when that debt's paid off. Then they can start using that tax-free money to fund education for their children.
That sounds like a win-win situation.
It's a beautiful thing. It is a beautiful thing. And it's, when people think about whole life insurance, they say, oh, that's the worst investment in the world. We're not using it as an investment. We're using it as an economic tool to pay off debt and to accumulate tax-free income in the future, okay? So
Sure.
We're using it as a tax strategy and a debt payoff strategy, not as an investment that's going to light the world on fire. I equate whole life to the little engine that could. It keeps chugging along and chugging along and chugging along and chugging along. All these other engines, the big, things are passing them, but the little engine that could makes it to the end because it's just one little step at a time.
Tortoise and the hare strategy, right?
That's right.
Tortoise versus
That's
the
right.
hare, too. So so just to recap here, basically somebody could take out a whole life insurance policy, and then by retooling how you pay into that, you can actually pay down your debt and then repay yourself back in the life insurance policy, and then that bit you're paying back will continue to grow and grow. So versus what if you were just paying down debt, quote, naked or by itself,
right?
You're not growing anything there. You're just getting back to zero. In this case, as in one of the stories you told, you could be at plus whatever that number is.
Exactly, because you're building tax-free income and a tax-free pile of money for the future. At the same time, you're extinguishing debt.
Well, that's something that more people need to explore, and it's hard in a 15-minute podcast here to really wrap one's mind around that. So if someone wants to have this conversation with you, you've been in this business for years, Gerry. Your dad was in this business too. How do they start this conversation with you and with your daughter Heidi too?
Well, just reach out to us at 314-442-6476 or hit us up on our website at rickenfinancial.com. There's you can fill out a form there. You can reach out and email us and just reach out to us because if you have any debt, this could work for you.
Yeah.
And I know people want to be out of debt, not pay a financial institution any more than you have to. And this enables you to save money and put money back in your pocket. And we're all about putting money back in the family and leaving money in the family as opposed to putting money outside of the family.
Well, for sure. Exactly. And making sure the kids, grandkids, and so forth are set up there. You take that 26-point-something year amortization to boil it down in half, basically, like you did with that one couple.
Yep.
That's a lot of money saved.
It is. And there's a lot of stress relief in this process because debt is stress. It just is.
It sure is. And, of course, you're not just in the debt planning business, but all facets just about of retirement there do you and Heidi cover. So it all starts with that one conversation, right?
Absolutely. Absolutely. And we'd love to hear from you.
Well, for sure. And again, that number, 314-442-6476. RickenFinancial.com, the place to go for that. Gerry, I appreciate you enlightening me on something brand new in this realm here, and I look forward to learning more from you and on the next shows too with Heidi as well.
Well, you know what? I appreciate you asking the questions that you asked, Doug. So
I'm full of way more questions than answers here, by the way. Just say.
Well, it's all about seeking the answers to those questions, and we're here to answer any question you have. And I just want to say before we wrap up, go Chiefs.
Hey, of course. Yeah, it's going to be a throwdown for sure in the Super Bowl. Well, Gerry, we got to remember, especially if the Chiefs win the bowl, but even if not, that every day
is a holiday
and life is short.
Laugh hard.
Be sure, folks, by the way, and thank you, Gerry, for that, to check out RickenFinancial.com, the Ricken Financial Facebook page. There's a YouTube channel, Instagram. You can find them at all the places just about. And if you like what you've heard here or think that someone in your realm needs to know about it, send them whatever link you were listening on, send it to them as well. There's a podcast link on RickenFinancial.com, and subscribe to these shows. They come out every single week. And Gerry, again, thank you for your time, sir.
You betcha. Take care.
Hey, appreciate you. And hey, thanks to Brandon Benefield, our producer, all of you for listening. I'm Doug, and we'll check you all later here on Kick It with the Rickens, Redefining Retirement.
By contacting us, you may be provided with information about insurance products, including annuities, offered through Gerald Ricken, Missouri Insurance License, NPN number 924708. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Ricken Financial LLC is not licensed in all 50 states. To find out if Ricken Financial LLC is licensed in your state, please call 314-442-6476.